So first and foremost, I want to start out with something. My Twitter stream is my opinions and my thoughts on the market and whatever else I feel like talking about. If you want to follow me, you can follow me. If you don't, you don't. That's as simple as it is. Today there was an attempt to bully me. It was actually almost quite effective until I kind of snapped out of it. I'm going to read you guys an email that I received today. And I think this is going to cut to, actually, this is very relevant to Twitter. I think that you'll find this very interesting. And this is all in the backdrop of Twitter trying to sanction their viewers. They've been deleting people they find offensive, and they even blocked their own CEO's account for a period of time in implementing this. So I got a letter today from an email from a fellow trader who I have a lot of admiration for, who I've considered a friend in the past, maybe not so anymore. So this is the email that I got. They forwarded me. This is also a program I appear relatively frequently on, and I'm not suggesting a boycott, but you might want to drop them a line and let them know that we do have some loyal supporters here as well. So the email says to me this, and I'm going to bleep out names for obvious reasons. This was written by the person who was trolling me. This person who is featured on your program frequently, who you use the handle Scotty P. His Twitter handle is Justin Pulitzer. He writes, "I think it's fair to say IWM grabbed shorts by the PU $$Y. I can think of little more insulting than saying being grabbed by the pussy is funny. As a woman and a rape victim, I can say simply not funny or appropriate to be on your show. I hope you never highlight Scotty P or Justin Pulitzer on your show again. A large percentage of your viewers are women, and I am insulted. I will pull my funds from said brokerage if you choose to highlight him again." The response that the host of the show wrote to me was this: "Justin, please don't call into the show anymore. Please. It's not good for business. There are some lines that you just don't cross, and you cross them, or at least you're validating or endorsing an idiot who crossed them in a big way, completely indefensible, signed by said host." So I want to address this first and foremost. My comment was not meant to offend anyone. It was just playful banter that I was using to express a situation. My initial reaction was, wow, I didn't really mean to offend anybody, and I truly don't. But so I figured if I really offended people enough that they took the time to write this, maybe I would just pull the tweet down, which I did. But I thought about it, and often, like in trading, I'll sometimes put on a position, and I'll immediately not feel comfortable once it's on. It's sort of an emotional test. And I didn't feel comfortable with pulling the tweet down. I actually felt that I was being bullied, the PC police, so to speak. And I put the tweet back up. And I'll tell you this, I'm not looking to offend anybody. My stream is to make money, and it is to have a good environment, a back and forth. I learn a lot from you guys and gals, as much as you take away from me. And like I said, I'm not looking to offend anybody, but I'm not going to be bullied either. And, you know, if I make some comments that are just meant, you know, to be playful, and that's all they were meant to be, that's how it is. And if you don't like my stream, you can unfollow me. And we'll leave it at that. Like I said, I'm not going to mention the broadcast name, but I know a lot of you are fans of that show, and I wouldn't mind if you expressed your displeasure with them for trying to treat me in that manner. Anyhow, that's that. We've covered that, and we will move on to the market. So today we had a FOMC statement. Just one more thing. I wanted to tie this in. I didn't want this to just be a statement, personal statement. And frankly, I was debating even having that conversation. I just feel that this is the reason why Twitter is failing. if they're going to censor and do these types of things, it's not going to jive well with their subscribers like myself. I know some other prominent people have been leaving Twitter as well, and I'm not saying that that's happening for me. Quite the contrary, but they're not going to do very much for freedom of speech and freedom of expression if this type of nanny stating is going to be in place. And I'll say the same for Facebook. Once you start censoring free speech, it's a very slippery slope, and if it's not defended, it will be eliminated. So that is one of my big beefs with Twitter, and I think you can notice the stock was down again today as a result. So I'm going to find it very hard for stocks like Twitter to rally until they start jiving with that type of environment. Anyway, the Fed statement was basically more of the same. I was looking at the CME website has a really good predictor of where rates are going to go. And right now for the December hike, it's factoring in 93.5%, so that seems like a done deal. My take on the Fed minutes, and I'll jive with that in a minute. The interesting point, though, is if you go out to February and March, the probability of a Fed hike past the one in December is very low. It's 7.3% in February, and March it's like 21%. May is even at 27%. I mean, these are low percentages. So it seems to me that the market is factoring in December, and it's going to be one of these one-and-done type of situations. Now, my thinking of that is my thinking of that is a couple of things. Let me go through the Fed statement quickly and highlight what I thought was important, and then I'll talk about how I think it can be traded. So in the beginning, they talk about measures that they can use to affect the market if there's a downturn. They mention basically QE again. They're kind of prepared to do more, so they kind of grease the rails to start out with. The code for that is when they talk about balance sheet expansion when rates are at the lower bound. If you ever hear that, that's code for QE. They talked about that they had no currency intervention, although I'd be very curious to hear if they were going to start intervening now with the dollar ripping. It's a much different picture than it was back then. They talk about the jobs and the participation improving, but they say it's not great. The Fed has been counting on the kind of the double up to catch up. The first half of the year was very slow, and I think that they are looking to hoping really that the second half of the year is good so that they can do these rate raises. Keep in mind the last few years, the first quarter has been very weak, so the Fed needs to tread very lightly. They talk about inflation rates being below trend. They mentioned that they basically blamed it on energy. They talk about minority employment being weak, blacks and Hispanics versus white, and they also talk about industrial production and mining improving a little bit, but manufacturing not doing well. Autos were flat. They talk about personal consumption going up because of autos and basically sales incentives, so I'm a little dubious of that. They talk about housing being weak, but I think we had a recent number that was fairly decent. They've talked about modest pickup in business investment, and this has been crippled because of regulations and lack of policy certainty. So they mention a rebound in mining. I mean, that has been so beaten that I guess, they needed to keep the lights on, so they brought in a couple of people to make some improvements. They talked about defense spending being up, non-exports being up. They talked about soybeans. A lot of our export, we're a deficit always, and it's been narrowing a little bit because of soybeans and agriculture, so I'm a little bit wary of that. That seems, to quote the Fed, transitory. Inflation expectations are unchanged. They talk about foreign GDP picking up with Mexico, although I don't think that that's going to help too much with President-elect Trump. And they talked about UK inflation because of the Brexit. They talk about wages going up, labor participation going up, but the slack in the labor market coming down, and they talk about lower inflation. I want to jump through some of this. They talk about credit being okay, particularly in non-financials. At the time, the dollar was sinking a little. It's up huge now, so that's going to be interesting to watch the Fed navigate that minefield. They talked about commercial real estate's loan tightening a little bit, and CMBS picking up a bit. So interesting. I'm curious to see if they comment on that again. Let's cut through the residential mortgages. Not too much to see there. They talk about subprime tightening a little bit. That was that HYG stuff that I was talking about. They talked about foreign central banks having a little bit limited scope in terms of their policy, how that's been affecting the market. Anyway, let's cut to the meat here. They talked about the GDP risk being lower, the overseas risk being lower. They say the employment risk is better. Inflation risk is balanced, and they talk about energy and imports improving. And economy is balanced to the downside. All right, so given all that, why is the Fed hiking interest rates? This is not a very hawkish tone at all. This is very, very dovish, actually. I don't really see, if I were just to read this and I didn't look at the, by the way, they also talk about structural trends in the employment situation. They're finally realizing, they talked about the prime age of males not being at the pre-recovery levels. They talk about less people leaving the labor force rather than new participants coming in, and that is the reason for this pickup. So people are retiring later. It's not because the job market is getting better. This is a very abysmal situation here. Anyway, the Fed seems like it's on course. They want to, I don't know, they keep talking about their credibility. I'll tell you, they start hiking rates and there's a recession, their credibility is going to be in the you-know-what, in the tank. I was going to use something a little bit more graphic, but we're going to keep it PC since we've already sort of breached that barrier a little bit tonight. So that's the story. My take here is that the Fed is going to go in December just because they can. It's sort of a freebie. If they do it and they're kind of dovish, I don't think it's really going to make too much of a difference. What they've been waiting for is finally arrived. The cavalry has arrived. They have Trump, and he's going to cut taxes, and he's going to do a huge fiscal stimulation bill. If they're smart, he's going to have to spend $1 trillion to do it, and that's going to require borrowing. If they're smart, they'll keep the damn interest rates low so that we don't have too many problems with that. They'll probably, my guess is he'll do something like 50-year bonds and benefit from these low interest rates. That would be ideal. So how to trade this? A couple of things I've been noticing is this TLT. It kind of knifed through the 61.8, which was at 125.86. I was surprised at the ease in which it had a gap and go below trend. We're into an area now, though, where it's sort of a pause. Now, I think I've seen too many people ask me, are we going straight to 114, 115? It seems to me that would be really aggressive here, that we could use a little back and fill pause. The ideal setup, however, would be to go straight down there, and that would set up for a screaming buy. I'm operating under the assumption that the actual hike will be a buy the news. Everyone will have puked out their treasuries ahead of time, and then treasuries will rally like it did the last time on interest rate hikes. Traders do what works until it doesn't. The last time the Fed hiked rates, that was sort of the bottom in the treasuries, so I'm under that assumption for the moment. The same thing could be for the dollar. I talk about the dollar also. That is, by the way, I've said for a while, is a circular reference with regard to the Fed, that the higher the dollar goes, the higher the probability is that traders are going to think the Fed hikes. But the more it'll get the Fed worried about the actual hike itself. It's crazy, but it's really true. The dollar busted out this week. It is coming up from the bottom a bit. We're close to the 61.8 fib, which is 102.098. So I'm thinking that we had the bust out, but it might chillax a little bit. That's a new term. That's a new term that it's really new to this, but I use it in my real life. Chillax, like chilling and relaxing. I did a measured move. If you do it 2 times the range, that basically takes you up to 109s. That is possible. If it gets up there, I'm thinking it's a short. Everyone there will think it's 120, and it won't necessarily be happening that quickly. So I'm thinking short term, this could have a bit of a pullback, but bigger picture, it could continue going, particularly if the Fed is going to really have its skis shined up. Grab a stick of juicy fruit, right? So that's the deal with regard to the those market keys. The other ones that I watch are China, which has not been acting all too well lately. We're back to we had a channel break. Yeah, hashtag chillaxing. We had a channel break, and now we're retesting the backside of the trend, the old trend. We stalled at the 100 MA. I'll keep it simple. Anything below the 100 MA remains a short. If we break the 100, I think we get the 50 MA test pretty quickly, and then we're going to kind of determine who's who in this situation. I didn't draw this in, but I have a trend line that I need to draw in here. And we're still below the trend. So the problem for me with the FXI, and this is the case with me, I get really stubborn when things make lower highs and lower lows. I don't like to buy them until I see that pattern change. And right now we're still making lower highs and lower lows, and we're below the channel. So I'm okay with keeping short or initiating short below the 100 MA. If it can clear, though, the trend line and the 50 MA are really kind of simpatico. So it wouldn't even surprise me to see a retest of the 50 at some point here. So I'm cautiously thinking, I shouldn't say cautiously anything. I'm cautious on it, and we're at an area where it's got to make some big decisions. If it doesn't behave here, it's going to 32s. So that's the key. Sometimes when we talk about FXI, like pretty much always, we talk about Alibaba. Nailed that one pretty well. It held trend, it's bounced, also stalling at the 100 MA. I love when there's kind of these confirmations. So I'll keep it real simple with Baba. If we can clear the 100 MA, I'm good for launch to the 50. If we stay below the 100 MA, I think that 200 MA might get retested and potentially do a snapperoo. We'll have to see. I haven't really been loving Baba lately. So below the 100 MA to me still remains vulnerable, and I really need to, if we could clear that 100 MA and the corresponding last swing high, which was 95.30, we would potentially be making a higher low and then a higher high on the leg, so that rally could continue. Where would it continue to? This is driving me crazy. I'm just trying to get to my drawing tools. I would draw a Fibonacci on that bad boy, and I don't know what this is. Wow, I picked a regression channel. That would not be helpful. A Fibonacci retracement. Although a regression channel might be a little helpful. I would be saying, I don't know that we would get the full bounce. Yeah, this actually would make a lot of sense to me. I think that if we can hold and clear those 95s, we'll see the 98s, maybe 99 to 100. The 61.8, oh no, this is definitely not correct. Hold on, 109.87, we gotta change that. Hold on, disregard. Calling an audible here. I did not snap this properly. All right, so we held basically the low here. I think that the 50% fib to me would look like where we might want to go if we clear the 100 MA, which is, 98.88, and then 101.47 is roughly the 50 MA. So I don't know where that'll be at the time. It probably will be down by the 50. So somewhere in there between that 99 to 101 area, I wouldn't even mind reshorting it back up there. So it held trend. I'm okay. I think it's okay here for the time being. If it starts losing 90.75, that's a short entry. If it starts clearing 95.30, it's a long entry. Keep it simple, stupid. Apple has been acting, I'm just now going to go in order. This Apple has been acting like poop, right? I had been playing it long. It got basically to where I was looking, that 112.39. It actually went a little above When I saw it starting to back off, that's when I got out, and it turned out to be pretty good. Today was a nasty gap down, but it was bought. I'm okay with Apple as long as it's above 109.85. Yeah, that area to me is an important area. You don't really want to see it below there, but anything still below the 50 MA to me still remains vulnerable, which is it's still at 113.23. The 61.8 of the range, if the rally is to continue, is at 113.11. So we really need to clear that. If that is to clear, I think we would see 115s pretty quick. I don't know that we'd get fully to 118s, but I think 115s. It held basically the 20-day moving average today, which was the moving average that it broke down from. So let's play a little game. I'm okay, and we have a hammer today. So below the low of day, which was 110.33, I think we would see 108.82 quickly, which is the 100 MA. Anything above today's high, I'm fine with playing for that move back up to the 113s. That to me would be I don't know if I would say quite a look below and fail, but I would say that it shouldn't be back up there if Apple is really going to be a crap out again. Facebook. So this is a name that I was a super bull on, a mega bull, but I wouldn't want to say souring on lately, but I've been very cautious on lately. It had this gap and go down. It tried to rally. It stalled at the back of the trend channel, and then was down 2 days ago. 3 sessions ago, including today. We had a breakout day, and the low today basically held where we needed to hold. I said that 119 quarter to 119 half. As long as that area held, I'm sort of still okay with it. The 200 MA is basically 119, so if you want to be a little, I don't know, 119. Let's keep it real simple. As long as that holds, I'm sort of okay with it, but it closed today just a squeak over the key level of the 128.80. So everyone here likes a quick trade. Above today's high of day, 121.31, I like long for a move back up, maybe to 123s or 125.88. A move below the 119s. If we can't hold the 200 MA, you could probably see the 113s again fast, and then even the 108s and 109s. So that's my kind of quick man's draw for that. So someone asked me about Chipotle. I honestly, this thing is like all over the place. It looks like it's consolidating. Let's keep it real simple. It's basically has a 100-day and a 50-day and a 10-day moving average confluence here. If you can clear the flag of 119.30, this should see 142. The 200 MA is 431.22. I would think that that's an intermediate term target, and then the 41s, 42s. If you lose the 50 MA, I'm not so keen on it. This thing, it basically filled a gap. It's chopping. It has a consolidation range. I like to use the big kind of range-defining bar. So anything below 397.63 to me is a lot more iffy. Like I said, above the 119.30, I think she can run. And I would at first, let's see, we could double that range up. So yeah, it could probably run another 20 or so points, which would be consistent with the 442-ish area. HPQ I like. It was down a little, not HPQ, sorry, HPE. That's the one I'm curious about. At HPQ, I really have no interest in. HPE was a move lower, and then today engulfed 2 prior trading days. It held the 50 MA, it held the backside of the old channel that it was constrained in. I'm thinking this sees 25.37, which would be 2 times the IPO range from the IPO high to the low. By the way, if you're looking how I do those calculations, what I do is I take the IPO high of day and then the lowest swing low between there and crossing through the IPO high of day. So in this instance, this was 18.5 was the IPO high, and the low was 1162. So once you cross that area, I usually assume that the range is just going to double. This one was a little bit sloppy and took its time, but is doing what it should be doing. So that's kind of the area that I'm looking for. Amazon, I talked about that I thought that this would have a big bounce. It got it. I said I thought it would get to or stall just below the 50 MA. That's exactly what happened here. We're roughly holding the 100 MA. I'll keep it simple. If we can hold the 100 MA, you could stay long. If it gets back below, we would potentially risk a move back down to fulfill Raz Al Ghul's destiny. I mean, get back down to the breakout. So that was what I'm thinking with regard to this, that the 100 MA now is going to be key. If it can hold, we can go higher. If it can't, it's got some trouble. The 50 MA to me was the support. It should now be the resistance. I assume it's resistance until it's not. Simple like that. So yeah, that's my thinking. I think we got the bounce. And until we can get some closes over the 50 MA, I'm still a little bit concerned. Covered Twitter already for the most part, although I guess I could mention some humor people with some levels. This thing is just in a chop mode. I think it's just going to kind of consolidate here and build a base. It seems to be rejecting at the 50 MA, so as long as we're below the 50, it's vulnerable. Back above, I think, can start filling in some of this move down, and 200 MA is really the must hold. So needs to hold the 200 and needs to clear the 50. Someone asked me about this stock, this PRI. Wow, not one I really am very familiar with, but this thing is definitely on the move. I need to do some more analysis on this really to be comfortable commenting on it, because it's not one I'm familiar with. I mean, the place to have really bought this thing was when it broke over the 59s. I mean, it's extended. You know, you're in a consolidation range here, and I mean, you got to see it clear the 73.05 now for it to make a move higher. If you can do that, I mean, you know, there's really nothing to say it can't go higher. But I personally feel like I'd be a little late in this, and I don't chase some stocks that I don't really know that well. I'll post how about I post a chart on this? Let me make a note. I'll do the chart work on this and post where I think it's going to go at a later point. PRI. Let me circle it too, and give it a little star for good measure. Netflix. Why isn't that coming up? There we go. Zoom in. I'm still struggling with this zoom in stuff. We're back into the gap range, so 116.5 needs to hold. You're above now after the move down. You're above 1, 2, 3, 4, 5, 6. The 6 days of consolidation. It moved 3 days ago. Now it's holding. So. I'm alright with it as long as it holds the 116.50. Below, to me, gets a little more iffy. It's still making lower highs and lower lows, so I really would prefer to see the trend break before I kind of took the leap of faith. I was hoping that this was going to... It stopped at like the 110s. I was hoping this was going to press down to the 106.90, which was really the breakout and 50% fib. It didn't, so I'm still in a little bit of caution mode. It's still below the 20 MA, so I would wait till you have a solid break of the 20 and the trend before leaping into it. But if you're already in it, 116.5, if it's above there, or if you want to try a right or right out trade, that to me is all right. GLD I've been very bearish on. I said I thought we were going to see the 112s. Today we achieved it. It stopped, unfortunately, just above the 112.04 area. So here's the key. Today was a gap below range. If it can gap up tomorrow, this could be a island reversal down here. I wouldn't even mind if there were like 2 days and then you gapped up. I'm still thinking the dollar can go a bit higher, so I don't want to like throw all in with gold, but it's moved a heck of a lot, so I don't want to. What the hell just happened here? These charts, this thing like zoomed me out so far. I was like, it was like when Hans hits the Millennium Falcon hyperdrive. That's how far this thing took me out. Yeah, that's the end of the range. That 112s. That's a big gap fill, and it's a big area. I like the idea of a right or right out trade in gold for a bounce for the first time in a long time. GDX, while we're talking gold, is close as well. This has a bit of a double bottom. Unfortunately, this also stopped ahead of the 61.8, which was 1981. So in this area, I'm okay with a kind of a right or right out trade, but keep in mind it is making lower lows and lower highs, so it's got to be against today's range. I would say that above the high is a long and below the low is a get the F out. I've been long this potash for a little while. It's finally starting to perform. Someone asked about CF. So CF is it's first breaking a bit of a... What? This is just like torture. Sorry, bear with me. 200 MA, right on it. Long above today's high, short below the low. Keep it simple. Potash. This to me looks like it's just in a range chop. It's pulling back a bit, so it kind of hit the top of the range. I wouldn't necessarily chase here, but I don't mind it on dips. Gap stores. So this articulated a big decline. The bounce has been significant, but not out of the woods yet. I like that it held the 100 MA and the 61.8 down at the 25.07. It undercut it a little bit, so we have 2 days of consolidation here. If you start losing those low, like let's keep it like this. I'm fine long against the 100 MA. If it loses it, I like flipping short for a move down to the like 23-ish area, 23.53 to 22 quarter. The gap fill is at, I have a buy order in there, so I can't see the damn level, 22.78. So around there, I think would be, like if it were to bounce, like have the little bounce and then the move lower, I'd be into buying the trend and near the gap fill. That area to me looks a little bit more enticing. But if it holds 25s, I'm fine with holding long if you're in there. I can't read my writing on this, so that doesn't help. Bank of America. Someone asked me about this. We got the 1.272 fib extension at 2052. The 1.618 is at 2311, so I'm not necessarily saying that it's an amazing trade location, but if you're with it, stick with it. I think that it's good. I mean, as long as this thing is over the 2020 area, it should go higher. If it starts getting back below there, maybe start trimming the profits. Wells Fargo, someone asked me about. Not one I really follow that often. The CEO getting axed was the spot, right? You have a multi-day consolidation. I'm fine long as long as this thing holds 50.73. If it starts losing 50.73 and like 51s, that area, it's not good. And now we're talking about Fibonacci extension territory, which would start. I mean, I often say we're a long way from Kansas. If you've watched me for a while, 54.06. Let's see. I didn't draw this in well. Let's redraw it. All right, hold on. I'll be back on screen in a minute. I'll cover a lot of these, I think, in the weekend review. Yeah, we're a long way from Kansas, Toto. The 200 MA was really big resistance for this thing. I would think that at some point, I don't know when, it will revisit there. Currently, it's 48.81, assuming it stops here. I don't know that it will. And my guess is the 200 MA would probably be there around the time that it got there. Yeah, this thing is it's just kind of hanging out, right? It broke the trend, it retested, now it's kind of it's just like riding the backside of riding the old trend line. It's kind of like riding that area. Yeah, this thing could go higher, but like I said, I'm fine with it as long as it holds that 4073. Sorry, 5073. Below there, it's a stop out in my view. You could even probably use 5096 since that was the last swing low, and it was a decent sized reversal bar. If you start losing that, I like right or right out short. Anyway, that's my story, I think, for today. I'm sticking to it. One last comment on IWM. This thing is what caused all the controversy, right? So I was bearish on it when it snapped the trend in the 100 MA. I said to start covering down in the 114s. Wow, that turned out to be quite prescient, and the thing is like just in beast mode. It's up 14 days in a row. I'll tell you, if you flip a coin like 100 times, the gambler's fallacy is that you can't keep going. Usually the max is 15 in a row, so I think we're getting close to a near-term inflection point. I did some Fibonacci analysis on this. It got over the 1.618 extension today at 132.68, so I am saying it is time to start booking some profits. On a larger term time scale, the channel high is like around the 136s to 137. So as crazy as this sounds, on a bigger time horizon, the 1.272 fib extension is 138.75. On a much longer, on the same time scale, the 1.618 fib is up at 151. So this thing could just pull back and chop and then eventually, go to the moon. It's just not going to happen straight out. I think it's time between here and the 136s and 137s is to start booking some profits. Up at the problem is that this thing has in the past gotten to the trend and then it's been very choppy in like a grinding fashion. You could try right or right out, in my view, short against the channel high with like a really tight stop. If tomorrow's closed, but if like Friday or Monday we were to get like a move below today's low, I shouldn't say Monday, the next trading session, if we lost today's high at the 1.618, I would think that we could get a bit of a pullback. The old reference high is 129.10. That will probably get checked back at some point, and the breakout of this range was 125.88. So as crazy as it sounds, this IWM could pull all the way back there and it'd still be bullish. That's just how cray-cray this thing has gotten. So it's late, in my view, to start chasing. I don't necessarily know that we need to pick tops in short, but I think somewhere between here and like 137-ish should probably, I don't know, hold it for a while, and maybe there's a quick trade as a reversal. The ideal scenario, of course, would be to go straight there without a pause, get this thing really super-duper overbought, which it is now, and then it, have a bit of a pullback. Anyhow, happy Thanksgiving. If you missed this video, I'm going to repost it a little bit later tonight on my YouTube channel. That's Justin Pulitzer Trades. My Twitter handle is @JustinPulitzer. Again, I'm going to work on trying to be maybe a little less offensive with people, but there is freedom of speech and it's America, and you can choose to follow me or not. I'll just leave it at that. Anyhow, have a great Turkey Day. I hope everyone is having a good time in the markets. It's definitely been real. Have a good Thanksgiving, and I will see you on my Sunday video, weekend review. Cheers.